It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. Though the broader market has hit record highs in the past few months, not all individual stocks are in positive territory. Some provide great opportunities to buy solid companies at a lower cost. Others are best left alone. I'm here with James Demmert, Main Street Research Chief Investment Officer. Thanks for being here. Appreciate
Good to see you,
it.
Julie.
So we're talking about two stocks today that are down year to date. And let's talk about your buy stock first of all. And this is one that we have talked about a lot on the program. It's Apple. The shares are down about 10% or so year to date. So let's talk about why you still like it. And part of it is because it is down from the high. So good value right now, perhaps?
Yeah, Julie, it's down from the high. It's getting no love whatsoever from Wall Street. And in fact, the short interest, the amount of people shorting stock has increased quite a bit. And we think that's an opportunity mainly for the underlying, things. I think that investors are misunderstanding about Apple. Where are they going really in this, what we call the new tech-led AI bull market? It looks like they're left behind, but I think investors are mistaking that no, that's coming in the next quarter or two.
Okay, so let's dig into that a little bit here because, Apple has teased what might be coming here. There's been a lot of focus on some negatives and some perceived negatives like slowing sales in China. But you think that the AI tech is coming. What gives you that confidence?
I think the China sales is moderating, first of all. I think investors should get used to that. And I think it's in the stock price at this point. What we think is exciting, and if someone missed NVIDIA or any of the semiconductors that have been the really hot stocks that led AI in the first phase, this is where you want to go now. Because the next phase is where does AI sort of make a difference? And we think the iPhone is what's going to be carrying AI over the next quarter, 2, and 3. First, it starts with AI subscriptions, probably in Q2. I don't think the street is putting that in the price of the stock here, and we think those subscriptions on a $200 million or 200 million users can be very significant to earnings.
Let me just stop you right there, because what does that mean? Meaning there would be something ChatGPT-like that Apple is offering as a subscription service on devices?
Think like a Siri that's really incredible, right? Siri right now is pretty not incredible. We think that the AI subscription to Apple is going to be that on steroids. So you're really going to be able to talk to your phone. It's going to be telling you what to do in that first phase. Subscription, of course. Service is good for them. Reoccurring revenue for a long time. So that'll be the first phase. We think that rolls out in Q2.
Interesting.
Q3 is really exciting because that's going to be iPhone 16.
Right.
We think it's going to be a phone that people are going to need to buy because it's new hardware that can run this AI. So that's another very exciting product cycle for
James,
Apple.
I don't want to hear that because I just bought the 15. But let's get to your last point here, which is sort of the investment strategy and the redeployment of capital you think that's going to AI just after they, for example, stopped their whole car endeavor. So why was that a good decision, and why is it good what they're doing with that money?
If you think about Meta, did that, the era of efficiency, reducing costs. I think that's what Apple's doing here. They're saying, let's give up on the driverless car and the $10 billion that we threw at that. Let's refocus. Where are they refocusing it? AI. So we think that's a very smart thought process they're going through of, hey, let's think about dollar in, dollar out, where is going to be most profitable. Really love that they're doing that. Stocks 25 times earnings. Right? I think that's wrong. I mean, the PE, right? The E is estimated to be a certain number by the street. We think that E is too low. So the PE today actually may be lower in hindsight as we go forward over the next few quarters.
We always like to put out a potential risk to this upside case. And in the case of Apple, it's that they don't bring this stuff to fruition soon enough. That's
exactly what the risk is. I mean, I think that if they don't make magic happen in the next few quarters, and I think it's the AI play, the stock definitely will be at risk because then you're going to have the China moderated sales on top of no real reason to get the 16. I think the stock would be in trouble.
Okay, gotcha. All right, let's get to your stock that you do not like. It's another one that's down year to date, and it's down quite a bit more than Apple. I'm talking about Boeing. Those shares are down more than 20% year to date, but you say, no, you don't want to get in here. Let's talk about why. First of all, there's sort of the obvious here. What's been going on production-wise at the company?
Yeah, I mean, it takes decades to build a great reputation, Julie. You know that. And it takes moments to ruin it. And I think this is what's going on. This is the story with Boeing. And it's really a management problem. They've had mistake after mistake, some of them the same mistakes over the last 2 years. And that is really making the institutional investors sort of walk away, and that's why the stock is down. Now, a lot of people think it's cheap, because it's down a lot. We think that is a value trap, and we can talk about valuation in just a moment.
Yeah, let's do that then. Let's talk about the valuation.
Here's a company in the last 12 months that's lost money. I mean, this is an AI tech-led new bull market. That is not really where you want to be. AI can't save their valuation, right? But going forward, the street suggests that you're looking at the price relative to the earnings. You look at that, the streets are estimating the earnings to be at a PE to about 60 times earnings. The S&P 500 is trading at about 21 times earnings.
Right.
Here's a stock 3 times as expensive as the average company. It's losing money. It's got a real reputation problem. I would stay away from a valuation standpoint.
Well, and let's get to the last one here, which is competition. Airbus, of course, its big competitor, not suffering from these same issues.
Airbus has got that reputation down. They've really been able to be very consistent. Now, one problem with Airbus is they're pretty much booked for a long period of time. But I think investors should recognize when companies have one of their biggest competitors have a problem like Boeing does, Airbus very well may come out with a new way to produce more planes sooner. So I think that competitive advantage that Airbus has could be a threat to Boeing. Another reason I don't want to own the stock.
Okay, one thing that maybe would draw you in, if the stock kept going down, would it get more attractive?
I don't want to use the pun, the plane crashes here, but if the stock crashes, right? I mean, if the stock literally went down by 50%, I think investors then say, hey, maybe there's value now relative to book value, the number of the planes, and the future potentially getting brighter. But the stock would really have to come way down and be less than a market multiple.
Gotcha. All right, and just to be clear here, you own Apple shares, if I'm not mistaken.
We own Apple shares as a firm and as my family, yes.
Okay, but you don't own Boeing.
No.
No. All right, let's summarize what you're telling investors here today, James. Buy Apple based on its current price, a likely blockbuster announcement at some point, and solid investment strategy. Avoid Boeing for its poor management, current valuation, and potential loss of market share. James, thanks so much for being here. Appreciate it.
Thanks, Julie.
And thank you for watching Goodbye or Goodbye. We're going to bring you new episodes 3 times a week at 3:30 p.m. Eastern.